What's up, guys? Welcome to Roensch Capital. Today we're taking a look at SOFI Technologies, ticker symbol SOFI, on a variety of time frames in anticipation of the next trading day, Monday, January 29th. Well, SOFI stock finishing the day on Friday just down about 3 cents, essentially flat, down 0.39%, but getting a little bit of a rise here in the after hours, up to about $7.70 a share. Now, just looking here at the 1 minute chart, there's really not a ton of information to grab. Not even many clean intraday setups, at least from a 1 minute chart perspective that I would personally be comfortable looking at or taking. So let's move on here to the 5 minute and try to get a little bit more context here. So looking here at the 5 minute, there's one pretty clear thing that I'm paying attention to on the 5 minute here. Look here. You saw this triple top in the pre-market right around 780. And when you got that test immediately off the open, what likely happened here is you probably got a test up through 782, 783, well, really 781, 782. And you probably got a couple of stops from the short side, buying, right? Buying to cover their short from a stop position, pops to 783, and then fades. That's really the only intraday opportunity that I'm looking at least here on the 5 minute. You might get a couple of penny scalpers here, fading that 50 period moving average on the 5 minute. But let's zoom out now and look at the 30 and really get some better context here going from a Monday perspective, okay? Now, what immediately jumps out to me here on the 30 minute, because remember, we're always looking at multiple time frames. The 30 minute, well, for me, it's the 30 minute, the 4 hour, the daily, and I'm always looking at all three of those from a day-to-day perspective. And I like to look at the 50 period and the 200 period. They're just the most commonly watched by far, and you tend to see increased volume around those trading levels because they're decision-making levels, right? Self-fulfilling prophecies. Very important. And you can see here in the after hours, granted it's low volume, okay? So naturally, the lower the volume, the more of a grain of salt you have to take the movement. But we reclaimed both the 50 period and the 200 period, backtested it, and held into the close of after hours trading Friday night. That's a really good thing to see, at least as far as a 30-minute chart is concerned. So moving forward into Monday, if I'm looking at the 30-minute chart from a bullish perspective, I'm thinking hold the 50 period, hold the 200 period, and that's going to be discouraging to some of the bears. If you're a bear here, you're currently positioned short SOFI, you're looking for a fade down through both of those levels, which are now relatively close to each other, within 3 pennies of each other, really. All right, let's zoom out now and look at the 4 hour, get kind of another opinion from another chart here. Of course, we have earnings coming up here on SOFI. Those are hitting before the market opens, so of course expect some additional volatility here. But see this? This is the 50 period right here on the 4 hour chart. In the last couple of trading days, the last 3 really, that has been acting as a potential area of resistance. So into earnings and through the earnings day, like after we get the report, I'm watching that level incredibly closely from a bullish perspective on the 4 hour. The name of the game here is reclaim it. Even if you hard back test it, just hold the 50 period looking at a 4 hour chart. You bears, right? You're thinking one thing on this 4 hour, fade hard off of the 4 or off the 50 period on the 4 hour chart. And if earnings end up being the catalyst to do so, so be it. If earnings end up being the catalyst to rip up through, retest, bounce out of that hole, so be it. Just get some psychology in your favor from a technical and psychological perspective on as many different time frames as possible, because it starts to get hard to argue when there's a supporting thesis, in your favor on the 30 minute, the 4 hour, and the daily. Okay, so let's move on here to the daily and take a look, and we will zoom in here. Now listen, as you guys know, that gray line's the 200-day moving average now because we're on the daily chart, and that white line, that's the 50-day. These are the 2 most heavily watched indicators in the world on SOFI stock, on any stock, right? On the most heavily watched chart, the daily chart. These 2 are very important. If you're a bear, okay, let's start with you guys here. You're thinking one thing. Reject the 200-day moving average, which currently is sitting right around 784. If you're a bull, you're thinking one thing. Let earnings be the catalyst, get up through that 200-day moving average, backtest it, hold it. That allows us to make, potentially a run at that 50-day. And again, right up there at 820. You're thinking break through and hold it. That would be an incredible sign of strength for the bulls, especially if we were to see a back test and hold. Bears, you just want to fade. Then the next level to watch, ideally, get down through 750, get down through that recent low around 720. Now, for you options traders, again, this is really important to pay attention to. Implied volatility, understand that compared to mid-November, it's elevated. In mid-November, we were down around 55%. We're currently 106.5%. So, if you bought options, looking back about, mid-November-ish, understand that you have benefited from Vega pump, right? If you recently bought options, understand that you paid potentially a Vega premium, and you do have slightly elevated risk of IV crush. Now, that's not the end of the world. Just understand that that's natural heading into an earnings report. IV tends to go up heading into a report. Sometimes it can fade hard after a report, and you have to get your delta and the other Greeks to outrun both theta and any potential Vega crush. Okay, just understand that. But again, IV crush is not a certainty after an earnings report. It's just common. Always remember that there's many things that go into pricing an options contract. It's not just, it's not just delta, okay? And speaking of that, let's take a look here at the options chain, get an idea of what the traders are thinking heading into earnings here on Monday morning. 555,000 total contracts traded. 336,500 of those were calls. 218,760 of those were puts. Pretty heavily outweighing to the bullish side, at least overall call to put ratio. Now, one more thing that gives us a lot of really great data, commonly overlooked by the way, is the short dated delta range of 0 to 20. Those are the out of the money, remember, gambly style, cheapy contracts that are usually short dated. What does that do? Looking at the volumes, it gives us some insight into the short-term speculator sentiment given a big enough sample size, which we do have here, over 500,000 contracts traded on Friday. And listen, the short-term speculators, 122,000 calls, 86,500 puts. So, not only is this a bullish chain with overall call put ratio, we're also leaning slightly bullish in the short-term speculation side of things. Again, that's the data. Whether it fits your bias or not, just understand that that's what the options data is looking like. That's what the traders are thinking on a mass scale. The entirety of the sample size, rounded out, right? If you got value out of this video, please go ahead and subscribe to our brand new channel here, Roensch Capital Charts. Maybe even consider leaving a like on the video. Helps out tremendously with the YouTube algorithm. And I'll see you in the next one.